Hi, everybody. Hi, everyone. Welcome to another episode of VCTV, which is the Venture Capital TV, and it's from LATOKEN. So the Venture Capital TV is a platform where we bring investors and entrepreneurs under to one platform to discuss collaboration, to discuss strategy, to discuss funding strategies, to discuss how to scale up. So this is the right platform if you're looking to meet these investors and strike some sort of working relationship. So please, this is the right platform for you. So I host it Monday to Friday. We cover many topics. We cover topics which are very relevant in the market today. So today, again, we are talking subject about family offices. The topic itself is about family offices. So how family offices are investing into startups and how they're helping grow the startups. We have discussed this in our prior episodes. So today we're going to drill down a little bit more into this. What are the challenges faced by startups in approaching these family offices? How do these family offices hunt for or look for these startups? And what are they really doing in 2021? Where are they looking to invest their money? So all these and some interesting stuff coming from our speakers today. So welcome all of you again. And I see all my VCTV family members. We have Gary. Hi, Gary. Good morning.
Hi.
We have Harsh. Good morning. Good afternoon. I don't know where you are.
Good afternoon, everyone.
Okay. John Paulo, good morning, I guess.
Yeah, good afternoon here, actually. Hello.
Good afternoon. Right. Good afternoon. And Vandana, good afternoon. I think Gary is only good morning. And good evening from here. So it's 7 p.m. In my local town, 7 p.m. in Singapore. So great. So as I open up this session, introducing the topic, which is family offices. I think Vandana, John Paulo, Gary, Harsh, we've already discussed this topic many a times on this VCTV. So we would like to probably a little bit tweak this discussion today and give a little bit more to our viewers. Obviously, this is not an investment we're not giving investment advice. So this is just for education. And okay, before I start with introducing the speakers, I'm going to introduce myself for all those viewers who are saying hi. Okay, cool. Thank you so much for your lovely comments. So yeah, I am the regional director of LATOKEN based here in Singapore. I've been hosting VCTV since last year due to the onset of the pandemic. And since then, the likeness for this platform, the likeness for our speakers have grown many-fold. Hence, we come back every day with covering many topics, and some of them are like this. We repeat it many times because of the sheer sort of interest from our community. So yes, so today we are going to again talk about family offices and their operations, their style of operation, the style of investing into anything, any portfolio, be it a startup or any asset class. So let's just know a little bit more about them today. I'm going to start with the introduction and background of each of you, and just want to know how you're associated with a family office. Are you yourself a family office, or you represent a family office? Let's start with John Paulo Parisi. Hi, John Paulo. Welcome back to VCTV. How are you today?
Yes, thank you, Sonny, for having me here. Welcome, everyone. This is John Paulo Parisi. I'm the chairman of a single family office out in New York and president and principal of a private equity group in California called ACC, and on a number of ventures, primarily in technology in other parts of the world, so primarily Europe and India. I'm also in Singapore, an advisor on the board of advisor of KingSwap, which is one of the newest decentralized finance platforms that has been created just last year. And I've been in the family office space for about 20 years. I've been an investment banker and a venture capitalist and a serial entrepreneur for over 30 years. Back to you, Sunny. Thank you.
Thank you for the intro, John Paulo, and welcome back. Good to have you back on this session. Next, I have Vandana. Vandana, hi. How are you?
Yeah, hi Sunny. I'm very well, thank you, and thank you for having me here again. Very interesting topic today, and I'm happy to see Gary, Harsh, Jumpalo over here as well. So I was in Singapore and Jakarta for 15 years in investment banking. I had my own family office fund there. This is my sixth year back in India. I did some investments, then I went back to advisory. So currently, I'm connected with 200 investors globally. That includes PEs, VCs, angels, HNIs, and we pick up global deals. Typically, we do $1 million to $25 million, and happy to assist anybody, and they can reach out to me on LinkedIn or on my website.
Perfect. Thank you so much, Vandana. I'm happy to have you back, as always.
Thank you.
Next, I have Harsh. Hi, Harsh. How are you? Okay, he looks static, which means he has frozen. No? Harsh? Okay. I'm going to come.
Can you hear me now?
Yes,
Yeah.
now we can hear you move. We can see you move, sorry, and hear you as well.
Perfect.
Sorry.
So my name is Harsh Shetia. I'm a founder of Startup Hackers. It's an early stage community for startup founders. It's effectively providing support, mentorship, and guidance to take them to the next level. Additionally, I'm also a venture partner with our ventures. We typically help startups raise up to $10 million of funds. Our main focus is Southeast Asia, but we do deals in Europe and Middle East as well. And right now, main focus, for this session, as you mentioned, family offices, right? We work extensively with a lot of family offices and get help them find the right investment opportunities. And really looking forward to this great discussion with my amazing family members here.
Love that. Thank you so much. Family members. Of course, we are family members. Oh, we have Mo as well joining.
Hello.
Hi, Mo. I just got a message that you joined because of the internet connection, but here you are.
Yes, I had to buy a SIM card to hotspot myself.
This is the sheer love for VCT.
Yeah, so
I think people.
Exactly.
Yeah.
Exactly. I wouldn't miss this channel for the world.
Thank you, Mo. Thank you so much for buying a new SIM card to join VCTV. I really appreciate that. Yeah. While you're settling down there, let's just take a round of introduction from Gary. Gary?
Yeah, great to be here. Great to see the other family members. I think we should be singing the song "We Are Family." You know what I mean? That's great. So, it's great to be here. I'm a serial entrepreneur and investor. I've started a few funds, $10 million seed fund. I'm the minnow, and I have some whale friends, a whale by super high net worth individuals, and we have our money in a fund that we created privately. I've done 17 companies, 2 unicorns, original management team of Click Software, sold to Salesforce for $1.35 billion a little over 2 years ago. Eva.ai, which is one of the top AI HR tech companies. My partner there is David Yang, a billionaire from Silicon Valley. And the reason it's good to have a billionaire is because they have a lot of money and they have family offices. It's really a good combination. and they're good for introductions and friendship. Also, I'm the CEO, co-founder, and president of GSD Get You Done Venture Studios, premier AI and quantum venture studio that's located in Santa Clara, California. We curate companies, primarily AI and quantum companies from around the world, using Silicon Valley as a port to take them out. So great to be here. Great to see some friends, and look forward to the conversation.
Absolutely. Thank you so much, Gary. And always, we need your energy on this panel. And thanks for your contribution and participation every day. Thank you.
Sure.
So, Mo, because you've joined us last, so let's take your intro as well.
Hello, my name is Muluk Sano. I'm the founder and managing partner of Capital, an investment advisory firm helping African companies raise funds. Also work for Jepson Capital. We're owned by the richest Danish family in the world. So although we're not directly a family office, we're more of a corporate venture arm. But yes, we interact with the founding family's family office quite a lot.
Perfect. And I remember last time you were in quarantine. Are you off quarantine now?
Oh, no. I'm still in hotel quarantine at the moment. Hence the like bad internet.
I sort of gather that. So people are in quarantine in various parts of the world. So yeah, great. Happy to have you all. Happy to have you all. Those who are traveling were lucky. I'm yet to travel. It's been over a year. I haven't moved from my country to anywhere else. So okay, great. So family offices, we know so far we know the fundamentals about family offices, but just would like to give a little bit more to our viewers today. Going to start with we'll start with this question: what is the real difference between a family office fund and a venture fund? And what are the differences between approaching? I mean, when a startup, if I'm a startup or entrepreneur or somebody looking to raise funds through a family office as opposed to a venture fund or private fund, how different it is, how different my approach to both are going to be. So if I understand these differences, so I think it's very much easier for me to know what exactly, who should I exactly look out for raising a round, right? So I need to know exactly who does what are their scope, and what are the limitations. I'm going to start with John Paulo with this question.
Yeah, thank you, Sonny. Well, actually, it's a complex question because it contains more than one question. I'll try to be specific and address it in sequence as you mentioned them. Well, the first thing is a single family office is not an investment fund. It's a family office. It's an entity that oversees the investment of just one family, and as such, it may contain within its boundaries registered investment funds or investment holdings, or it may just be using direct investments only as the preferred strategy of choice for investments, or any combination of the above. But it is not an investment fund. And I think it's important that our audience understands the difference between the nature of the entities that they want to deal with, because I still see that. And speaking with not only the egregious colleagues that I have here from other family offices, but also with other family office members around the world on a daily basis, I keep hearing the same complaint by fellow officers. And the complaint is that we get addressed and pitched to as if we were investment funds, and we're not. Investment funds have certain obligations, and family offices have other obligations according to corporate laws, obviously, and the civil law, but they're not, bound by the similar or the same regulations that investment funds have. As a result, the degree of information, the depth of information that you can obtain out of single family office versus the information that you legitimately can elicit out of investment fund is very different. And the single family offices are simply safeguarding the privacies of their families. They operate within the boundaries of the corporate laws, and even investment laws in the countries where they do decide to entertain operations and invest or operate. And investment funds are totally bound by the rules of the financial markets, because they are registered entities. And in family offices normally don't go around looking for capital. Investment funds, first and foremost, important task is to raise capital. The general partners, the sponsors of the fund, are going to beat the bushes trying to get the capital of limited partners. It's a total different game. It's a total different sport. And I think the first thing to consider when approaching, I mean, an investment fund or a single family office is to remember that those two entities are, different from one another, and that they cater to different needs. They have different objectives. They are run in different manners. And although some of the specialists that run the investment funds and family offices may have the same type of curricula, the same type of background, professional background, coming from the capital markets and from the financial industry at large. But again, they serve different purposes. And now this is the first part of my answer. The second part is, how to approach a single family office. If I remember well your question, Sunny, and I would say, that startups have to know the facts, and then the facts are that single family offices. Let me tell you something else on top of that. Single family office versus multifamily offices. Single family offices, tend to the patrimony and to the investment strategies of a single family. Multifamily offices instead are more of a consulting advisory firm, tending to the investment strategies or different families that combined can have enough critical mass to be meaningful to manage as a continuum in space and time, but that alone probably would not justify the creation of a single family office. And so also this is a different type of entity. Again, a multifamily office doesn't work as a single family office, and it has different hurdles and issues that if we want, we can address separately later. But also they're a different animal than investment funds and single family offices. Now, back to the question and how for a startup to approach a single family office, I would say that in my experience of 30 years in the industry, startups and single family offices blend only in specific ways. So lo and behold, I think single family offices invest in their own startups to begin with, and or invest in the startups of fellow family offices, or invest in the startups of people they know very well. It is an extreme rare coincidence that they would just react to some pitches from the market, unsolicited pitches on the market. Now, what does this tell to startup founders? That if they really want to become interesting as a quantity for family offices out there, they should try, like my fellow partner Gary has mentioned several times in these LATOKEN BCTV panels, they should try to find the best channels that can put them in touch with a single family office, which is normally a channel which is somebody that the single family office recognizes as a known quantity in the industry, and whose vetting capabilities would stand peer review, and whose vetting capabilities and knowledge of the industry would save aggravation in consuming time, money, and sometimes losing faces, with people that are not, the adequate counterpart to single family offices. So I think it's a sort of a long haul for startup to engage with family offices. The direct approach normally doesn't work. I mean, it may work in the sense that you may reach out to the family offices. You can, drop an email or even, have a telephone call, but very rarely that creates a condition for the engines to rev and for things to get into motion. I mean, that alone doesn't cut it to the chase. I think the triangulation through some entities or fellow recognized members in the industry is the best skeleton key to open up the doors. And with that, I'll back to you, Sunny.
I think, Paulo, you have nicely explained. Not only the difference between a family office and a private VC fund, but also differences between a single family office, a multi-family office, and how can startups approach them? Because it's not the same. It's not the same principles. They do not work on the same principles. I think you have nicely explained it. I like to hear additional. I like to hear additional thoughts from other speakers. But before that, I just want to highlight one thing. We have a big community of viewers who are really, really appreciating all of you. I love Gary, sir. I love her, madam. So Pratap Kumar Bojak, I just want to name him out. He's been sending all the best wishes to all of you. So Pratap, you can write where are you from, where are you watching us from, so we can send some regards back to you. I love Gary, sir. So Gary, there you go.
Well, thank you.
Awesome. Okay, great. We all know that. He's very nice. So Gary, let's go with you next because you've got a big fan right now.
Oh, well, thank you. No, I appreciate it. And it's great to have those incredible viewers. So, the family offices, it's just like when you deal with really high net worth individuals, extremely high net worth individuals, it's not so easy to meet them. It's not like you're going to see them walking down the street and they're going to engage. They're very elusive, just they don't tell you their last names a lot of times. They tell you the first names. You can go out to dinner with them. You can have drinks with them. You can do all kinds of things, but they're closed because, they don't want to have exposure. So at the same time, if you've got a vetted introduction to a family office, now think about it. When you come into these family offices, the idea for the family office is, and this is direct from one of them a week ago, is to preserve multi-generational wealth. So that's why they're set up. The amazing thing about it is they're a lot easier many times to get money from once you've developed that relationships, because if they believe in you, they believe in the kind of things you're investing in. They do reach out on occasion. However, like I said, you need one trusted person. And this family, in fact, 2 days ago, I was on a call with the Family Office Association, one of them that's located in Florida, in Tampa, Florida. And, it's basically you need to get that in. You need to have the trust. And then the other thing is they verify who you are. So I had one of the family offices tell me that they've been following me for 10 years. And I said, wait a second. You mean following like in following or following like watching or reading about me? Okay. And they said, no, we've been just reading the things. I was really surprised that they were watching and did that much research, because when I talked to them, they knew more about me than I could have possibly imagined. They've watched VCTV, they've watched my shows, they've done background checks on me. I mean, all kinds of things. It was really interesting. And but the deal is, once you're in, you need that trusted source to get in and get vetted. And then you got to be sure that you're not you're not aggressive when you're meeting with them, because whenever you're a bit aggressive, they get nervous. They think there's some other kind of agenda. So you got to make sure that, they come to you in a sense. It's kind of like dating, right? It's better for them to come to you than you to come to them. So, right. But it's interesting because once they come, they start to flock to you. One brings 5 brings 15. It's crazy. So once they start flocking around, then they want to invest in different opportunities that you have. They start. It's like Bitcoin, I guess. Once one comes, they all start to come around, and all of a sudden it goes crazy. So you've got to go down through, and the one thing I do anyhow is I keep everything really business with them. It's not like we have. I just keep it business. I just don't want to mix it up. And the other thing is, just one of the rules: if you go out to dinner with them, make sure you pay, because they watch to make sure who's buying what. And if you're in it just to get something out of them, or you're really, in it to have an equal relationship with them. So I have my partner. Several of my partners have been billionaires, and And I hope they're listening. They're really cheap too.
Oh.
You know, I buy the lunches.
Billionaires.
I went
Billionaires.
to one of them's office and he said, "Come on over for lunch. It's my turn to buy." And he had Chinese food, take out Chinese food in his office. And yeah, so anyhow, it's an experience. It's a really interesting way. They're very, very aggressive right now for AI and quantum companies. They're really excited about it. They do like impact investing and inclusion. So if you're wrapped around that, the family offices have mandates themselves to be able to, and part of it's good visibility, but the other part of it, some of the family offices really care. So, yeah, it's exciting. And by the way, Sonny, you've had multiple family offices on VCTV, and some of those family offices are ones that we've been on panels with over time, and we've developed relationships with. Right,
Yeah.
and they don't come in. You don't know it when you see them on the VCTV who they really are till you start to do a little bit of research.
By the way, our friend Marin, I'm just pinging her, and she's moving houses. That's why she couldn't attend this episode.
Yeah, she's really nice, by the way. I like her. She's a good person.
Yes.
And she's fun too. In a German kind of way, fun.
So she's going to be on other coming panels once she's all settled.
Okay.
So that's so I have got lots of comments coming about you, Gary. So yeah, we can take this later. Oh, thank you so much, Gary. I think you've got another follower. I don't know for what, but anyways. So and Harsh, I'm going to come to you. What Gary said, what John Paulo said, what I gather is it's about not much about professionalism. It's about personal relationship building. It's a process. It's not like you write an email to a venture partner like a VC or probably they set up an appointment, you go and have a chat or meet them. It's not like that. It's probably more like a family sort of bonding over time. And as Gary said, they're very selective and they're watching you and everything. So what are your additional insights or thoughts between differences when it comes to differences between a VC or a private fund and a family office, and how do you see family offices differing from single family offices working differently from multi-family offices? And for a startup who's new to this space, it's very confusing because we've all seen VCs are very active with startups, and startups also equally know how to reach out to a VC, right? I mean, they have pitch competitions like this, they come on these kind of panels, they're actively out there saying that we are investing in so and so. But with family offices, that's what I gather, it's quite different. So what's your additional thoughts on this?
Yeah. So Gianpaolo and Gary kind of highlighted it quite well, right? The structure is completely different of approaching a VC and a family office, right? So if an upcoming startup wants to reach out to a family office, they'll find it very difficult because they need some long-term relationships before them, right? That is where people like Gianpaolo, Vandana, or myself, that's where we come into picture because we are regularly in touch with them. We regularly pass on deals with them, and we discuss with them on an ongoing basis, and that's what is kind of required to build that ongoing relationship with them because a cold email will rarely work with someone like them because what tends to happen is unlike a VC, VCs have to be very aggressive. They have to be very pushy because fund life is like 8 to 10 years, and within the first 2 or 3 years, they have to ensure that they deploy all the funds. Right? A family office does not have that kind of a restriction. Their focus is to ensure that they don't lose wealth. For a VC, the idea is to at least deploy the funds within the first 3 years, and then just work on the startup and help them grow their business. That's why structurally they are completely different. The regulation wise, they are completely different. Even the approach is completely different. So, for example, a VC, if we invest in 20 startups or 40 startups, they are expecting 3 or 4 home runs, which will kind of completely take over the rest of the investments that they made. They don't expect to have like 20 hits or 30 hits out of the 40 investments that they made. The idea is to get 3, 4, 5 major investments which turn into unicorns, and they kind of fund over the rest of the losses which are there with the rest of the companies. The main focus for VCs is like 25-30% month on month growth. If you don't have that, then the VC model won't work for you. Family offices, on the other hand, have much more different structures. They don't want that all or nothing kind of an approach. They prefer a higher success rate. Even if the company doesn't do like 30% MOM growth, they are fine with that. As long as the company is growing and they can show measurable good results, they're happy with that. Additionally, you can get very creative with the kind of structures that you want as well, right? So VC funds, they can be only equity focused or they can be only debt focused. An equity focused VC fund won't do debt. A debt focused VC fund won't do equity, right? Whereas family offices tend to be very flexible, very liberal about these kind of policies. They can do debt, they'll do equity, they'll do working capital, they'll do PO, they'll do international transfers. There are lots of other varieties which you can do with family office, right? So these are the kind of flexibilities and these kind of things which family offices operate. And most of the family offices, they normally tend to have that industry specialization, right? They are doing brilliantly in one industry. So what they typically tend to prefer is if they are working in that industry and they find an interesting startup in that space, what they'll do is they'll fund that and kind of figure out ways to kind of absorb that thing within their own entity so that it becomes a huge umbrella overall for them, right? That is kind of the overall focus. So if you look at some of the traditional Indian family offices, like you have Hero Group is there, you have TVS Group which is there. The primary focus is that invest in automobile sectors which are relevant to that, invest in those sectors, and kind of expand their branches in a way to kind of explore expand the diverse approach of the existing industries. So that is how the family offices look at investments, and it definitely takes a lot of time to build the trust and relationship. But once that trust and relationship is built, the the most best part, which I would say, that a family office has validated that that they have trust in you is when they actually reach out to you. Yeah, once a mandate comes to them, they'll reach out to you and ask you for feedback. Yeah, Harsh, I've got this mandate. I want you to kind of proofread that for me. Is it a good enough investment or not? Can you kind of curate that for me? That is the point where I kind of see, this is like I've really built some solid relationships with them. So this is the kind of relationship which we build ongoing. And once that is there, as Gary pointed out, right, the investments can come fairly easily. So this is the kind of thing which we typically prefer. At the same time, there has been slightly a difference as well in terms of what Gianpaolo was focusing on was like the conventional multi-generation family wealth which were there, right? Those kind of stuff had become extremely difficult. At the same time, in India, we have a new generation of family offices which are coming up, primarily focused on a relatively younger. So what has happened is the Indian startup ecosystem has grown over the last 10-12 years, right? So what a lot of the early stage startups which were there, they've gotten exits. A lot of founders have kind of sold their equity, and they suddenly have like tens of millions of dollars with them, and they've kind of created their own family office as well. So Snapdeal founder, Freecharge founder, they kind of have their own family offices as well. So the approach with these family offices is again different from the approach of the conventional businesses like the Hinduja family office or the Hero family office. So the approaches over there is completely different. And these upcoming family offices, they tend to be very open in terms of investing in newer startups at the same time, and they do offer a lot of value in a lot of resources to kind of help the investments that they are working on. So in one of the mandates which I'm working for right now in the automotive tech space, we just had a deal with them. A couple of millionaire founders, they kind of bundled together, and they're putting money in that group together, and they are not only putting money, they're also helping in growing the business. So this is a new generation of the first generation of multi-family offices which have been created by the first generation of startup founders in India, and that is kind of completely reshaping how family offices were traditionally looked at.
Right, right. Great points there, Harsh. I think you actually covered the Indian landscape in terms of family offices and how there are still differences between a hero family and the new generation of family offices that are springing up. Which is very good to know for all the viewers, because we have a lot of viewers from India, I can gather, who are watching us today, India, Bangladesh, Pakistan, for some reason, which is good anyways, because they would like to, I think they would really want to know and how to approach these family offices and what are the differences when approaching a VC as opposed to a single family or a multi-family or an asset manager per se. Vandana, we have lost Mo, by the way. He just messaged me. He just PM'd me that he can't make it because his connectivity is fragile. So yeah, Vandana, your take on this question.
Yeah. So I'll take it stepwise, Sunny. So
Sure.
let me just explain the audience what is a family office. A family office is a wealth management company which invests in assets on behalf of a wealthy individual or groups of wealthy individuals. Single family offices focus on managing the wealth of a single individual or family. Multi-family offices manage the wealth of multiple families who pool their investable capital together for more formal or institutional investment arrangement and to reap cost economies of scale. Now, over the past few years, family offices have been acting a lot more like venture investors. Not only are many increasing their allocations to venture capital as a way to capture the potential upside of early stage deals, they are also building out their own in-house capabilities to directly and successfully invest in startups. And indeed, 3/4 of family offices said that they have directly invested in startups, and 1/4 said that they have sourced their own deals, according to a global survey of a family office executive. And family members conducted, by Silicon Valley Bank and family office advisors. On average, a large overall portion of the dollars they invest in ventures are going directly to startups than into VC funds. As a result, family offices have established themselves as reliable and sophisticated players in today's venture ecosystem that can add strategic value to startups and venture funds alike. And they have become better at due diligence, helping to identify the right combination of idea, team, product market fit that leads to success.
Yeah.
And they can provide strategic connections to families operating businesses or other investors in their network. Now, coming to the differentiation, between how, what is the kind of difference? Now, venture capitalists raise funds with a 10 to 12-year life cycle and focus exclusively on building a diversified portfolio of multiple early stage companies. Family offices have evergreen capital. I mean, they have patient capital with an indefinite fund life, and they do not have an investment horizon. Venture capitalists compete for deals via PR, marketing, press releases, fund sizes, and news about portfolio companies, while family offices, they value discretion and confidentiality above all, and irrespective of how active they are in the investment. So they are very discreet. Like Gary mentioned that some of them don't like to give their names. I have also experienced that. I have some very good connections in Dubai. They don't like to give their names or what kind of investments they do, but they do investments and they meet, and they are kind of different to deal with than VCs. So I think that is overall everybody has covered up almost everything about family offices.
Yeah, thank you so much. I think you actually, Vandana, also brought up a very good dimension about highlighting the differences. Like VCs are like PR, marketing, very aggressive.
Yeah.
On what I've seen
Like
that.
internet companies, like
Yes,
yeah.
Totally agree. But
Yeah.
with family offices, I so far, I haven't come across that sort of aggressive marketing promotion. But you're right on that point. Highlighting the differences. So I just want to, I think Harsh is back as well. Okay. I just want to, now we have few more minutes. I think interesting, we're going deep into this topic. So I want to know about some investments that you have helped family offices with, without taking any names. We're not going to take any names here. I can hear myself talk. Somebody needs to put themselves on mute, I guess. Okay, thank you. So without taking any names, because we know that family offices are very discreet about their investments. So without taking any names, I would like to discuss some of the portfolio companies or sectors that they have recently invested, and what was the drive behind that? Was it the pandemic that drove that their sentiments to invest? Like Gary said, they are into impact investments. They were impact investments even before the pandemic. So has that taken off? Are they looking even more to invest in impact investments, or what about other sectors? So let's start with John Paulo with this question.
Well, I reckon the pandemic did not have any significant impact on the strategic posture of a single family office. Obviously, there could have been, tweaks and adjustments in the asset allocation, but they happen nonetheless. So I don't think that single family offices not being bound by, an investment period and a harvesting period, which is very confined and regulated as investment funds are, would be affected by the pandemic. I think single family offices traditionally invest in the lines of businesses where the families have created their wealth from, and as Gary said, the preservation of the legacy is paramount for single family offices. So it is not infrequent to hear family office members telling the unaware that we're not really going for the IRR as much as for capital preservation and preservation of relationships, even development of relationships and development of new deals with the usual suspects from the same line of business, if you don't want to call it elite. But most families have created their wealth in industrial manufacturing, services, technology. They tend to put significant allocation towards these sectors that they feel very comfortable with. And the way they deploy their capital could be in the asset allocation via public equities, privately held companies, direct investment, any variations thereof. And of course, this is another things on which single family offices are very, very, discreet about. They don't divulge their portfolio or their asset allocation strategies normally outside in the public. So I would say that, it's difficult to indicate a percentage. I could tell you, for example, my family has been investing in the maritime industry, both fixed and mobile assets, from ports to shipyards to marinas and the yacht clubs to maritime insurance brokerage, claim adjusting, because we knew that silos quite well. And we've been investing in the prime derivative of the maritime industry, being integrated logistics, intermodal transportation, transshipment facilities, because we knew and understand how cargo moves with the ships that we used to own and in the ports that we built, we co-managed. And so we invested in things that we understand. Obviously, there's also a combination of old and new. If you keep doing the things that you know how to do and you never experience or experiment with anything new, you never improve. So there is a in the secret sauce, every family find its own balance and the combination of old and new, adding new lines of business as they move forward in time, and all as new members of the family come to positions of responsibility in the asset management or even in the operations, or both, because don't forget that most of these families have industrial holdings and companies in their portfolio that they actively manage. So I think that this is I would say the cornerstone or the foundation of a single family office asset allocation. And then again, depending on the charter that each family has, the level of overseeing by the family office over the individual family member allocation can increase or be limited depending on the statutes that each family have adhered to and subscribed to. There are families, particularly in the German-speaking world, that are quite traditional, and they tend to, intervene in a different sphere, very, very down to the very private level of each individual. Others that are, more like in the Anglo-Saxon world, where this element of intromission, if you want, in the individual sphere is a little bit more limited. Again, there's no law, there's a total liberty. Every single family office arranges as it sees fit, and so long as it's good for the family, it must be good for the rest of us. And Am I answering your question, Sunny?
Yes.
Thank you.
I got that. I'm listening, John Paulo, as well as looking at comments as well, because people are really asking some questions relevant to this topic. Thank you so much. Gary, over to you. So, because it's very hard to know where they're investing, because as all of you said that they're very discreet about their investments, right?
Yeah. I mean, I'll tell you an interesting story. So I
Yeah.
was on a flight to Moscow, and one of the family members from one of the wealthiest families in the world happened to be on the plane. And I just happened we were in first class, and I happened to talk to him. He was with his friend. And, I just struck up a conversation. I didn't really get into, we were just talking about horses and, just things in general. So anyhow, I helped him out when he hit the ground in Moscow. I didn't know his last name at the time. So then he says to me, well, give me a call. Let's get to dinner. Go to dinner. Yeah, sure. So he said, I've done some checking. He said, I see you're in AI and quantum computing. I said, no, that's, I'm interested in that. So I go to his house. We have a 7-course dinner with 3 servants. And then the 3 other women are there from some of the most well-known families in the world, listening to this because their families are doing investments. So the door opens, right? You cannot believe this house. It's on the beach in Palm Beach. This is like over the top. I was sitting there, and I started, I'm just a country boy. But
I thought you were going to fly to Russia, or you flight back from Russia.
I was flying to Russia, and he was going over there for a visit for the summertime. He was going to Moscow with his friend to see what Moscow's like, and he couldn't speak any Russian, and so he didn't know how to get a taxi, nothing. And so I didn't want him to get in trouble, so I helped him. Anyhow,
Right.
it was interesting. So we come back, and so we started to develop this, relationship. But I could see where they were probing me you're talking about the risks, people that universities are started with their family name, that kind of level. And it was unbelievable. I got to tell you, the stuff they were talking about was so over the top. But they were very curious about AI and quantum. And so that kind of situation, I could see that there was an opening with those families. And now I see it's like 100-fold what it was before, because they understand that if they don't get into it, that they're going to be at the back end of this thing, that the people that don't understand, how those types of investments and supervised, semi-supervised AI, intelligent assistants, smart assistants, they're just not going to be there, and they're curious. So the 3rd generation of that family, some of those families are the ones that are really on the front lines, kind of like Marin's doing, right? Marin's, Schweitzer family's huge in Germany, but like her. And that's really where you get the in. And it was incredible to see how that world works.
Right. I think it's very interesting as well. Artificial intelligence, quantum computing is where family offices are interested to invest in. Which is
very, very interested. Another situation. So, there is someone watched VCTV, so because I've heard, but I got invited to the the VIP event at the horse show here, and you have, let's just say, people that have developed the most prominent software in the world. I think you can guess who those people, that person, and also, things like iPods and what I mean, iPhones and that kind of stuff. Anyhow, they were there. So
right.
this one person says, I'd like you to meet somebody. I hear it's Jessica Springsteen, right? So
Right.
I was in awe. But anyhow, that's how they do it. It was kind of like the informal approach, but that's how the door opens up. And that's where you start to get vetted. You know what they did right away, Sonny? They started Googling my name instantly.
Just right where you were
Right
there. Right
there. I was watching. I was unbelievable. And I'm like, I couldn't believe it, because that's the first thing before they send it to their security teams to really do a check, right? Because for them, it's nothing. But it was the first level, and it was amazing, actually, to watch it. Nice.
So what's your comfort zone? Working with VCs or working with family offices? Just personally.
I like the family offices because you can develop a relationship with them, and quite frankly, they're the ones that own the VCs, or they're ones that are behind. When you have the top, less than 1%, I mean, they're everywhere. So the situation is whether it's a VC fund or whatever, if you start to uncover it, look underneath it, you'll start to find those family offices or some way associated with it. So but it's just a fascinating world, as we go down through it. And I've been blessed because I have two billionaire friends. One is my partner, Neva, and another friend of mine is a guy named Pi Hong Chen. And Pi Hong, Sina, Lupita in China, Broad Vision, Siebel Systems, those kind of things. And it's an interesting world. And when you get in, they introduce you to their friends. You get unusual friend phone calls where you get somebody very well known that's equally as wealthy as them, wanting to invest in something that you have. It's incredible, actually.
Thank you, Gary. Next, I have Harsh. Harsh, over to you, please. So Gary just mentioned. So there are a few tricks and tips coming from each of you here. How to approach the family offices, and obviously, personally, you can build up a relationship, a family-oriented relationship like VCTV, and grow your startup or your your assets. Artificial intelligence, quantum computing. Besides that, what other sectors is it a fintech, or is it we know it's an impact investment area that they would like to invest, but other than that, what other sectors have you seen?
Got it. So most family offices, as Gianpaolo kind of mentioned earlier, right? They typically like to invest in sectors that they are familiar with, right? So if someone is like in the healthcare space, they would prefer doing investments in healthcare, whether it be healthcare services or medical devices or healthcare technologies. If someone, they are operating like a bank or an NBFC, they would prefer in a new age fintech startup. So the most of the investments typically tend to be in a sector that they're comfortable with, right? So typically that is what happens as far as the old school family offices are concerned. At the same time, you have these new generation family offices which I mentioned earlier, right? So increasingly, this is actually a surprising trend in India that you are seeing celebrities also do make a lot of investments in startups as well. You have movie stars, you have sports stars. They are doing a lot of investments typically in B2C consumer brands, e-commerce brands, and a lot of impact investments as well, because when they do impact investments, it is something, just because of the feel good factor. I don't assume they expect to see too many returns out of that, but just for that moral fiber which they prefer, they like to do that as well. However, more or less, if you look at it, the focus has always been in terms of the sectors which they're typically comfortable with, sectors which they understand, and slightly pushing the barriers in those sectors. So for example, if you have an industry, if you have a family office which have made money in the healthcare sector, right? Probably by owning a hospital or by owning a healthcare lab or a pharmaceutical company, they would kind of tend to push the barriers by creating the next generation of innovation in that space, right? So they would come up with, say, like an online pharmacy or like another home healthcare service provider, and that's how they're planning to push the barriers. So the biggest example for that would be I rather not get into the names of it, but essentially that's the idea. That's what they tend to focus on, to kind of push the barriers within those industry that they're playing and can kind of take it to the next level. The most interesting development has been, as I pointed out earlier, regarding the celebrities getting into space as well. You see Deepika Padukone, Virat Kohli, Alia Bhatt, these guys getting into the investment space, and it's really heartening to see how these new generation celebrities are not just focusing on their craft, but also very commercial and business savvy, and looking to take it to the next level and truly building generational wealth.
I think that's a trend set by Priyanka Chopra. Maybe she invested into this dating app, right? And the CEO is one of the billionaires right now. I'm forgetting her name.
Bumble, yeah.
Bumble, yeah. How can I forget that name? I think
Yeah.
she's a trendsetter for other Bollywood divas to follow her. Thank you so much.
True.
Yeah. Right. So, what's your comfort zone? Aha Ventures. Obviously, you have a lot of partners, portfolio. What personally is your comfort zone? Working with a fierce VC or working with a family office, a family, a high net worth family. What's your comfort zone?
So personally, I don't see any sort of comfort zone, right? The approaches is completely different. All that you need to do is you need to be flexible in terms of approaching them, understand what they require, and build that long-term relationships. As Gary pointed out, you can have much more long-term relationships with family offices than with VCs, right? Because in VCs, the typical focus tends to be for 3 years, 5 years when they core
So
invest,
you
and then the
prefer a long-term relationship. You prefer a long-term
no, no.
relationship.
So it as I said, the approach is completely different, right? So you need to be open and flexible in both ways. So I
Right.
personally am comfortable with family offices as well as VCs. I don't have that kind of restriction either way. The important thing is, as Bruce Lee mentioned, you need to be like water. You need to be very flexible. You need to be able to adapt to what the situation is. That's what I prefer.
Right. Okay, got it. Thanks, Ash. Vandana, over to you. Let's just wrap up the show after this with some closing remarks. Thank you so much. Vandana, over to you with your insights.
Yeah.
Like what sectors that you've seen that they're currently invested or looking to invest in?
So I think both family offices and VCs, they operate totally in a different manner. And both of them are equally important to me because, you never know which investments will go through a family office, which will go through a VC. One is that. Second is family offices are looking into invest in AI. That is true. They are also looking into invest in fintech, agri-tech, health tech, edu-tech. They also invest in funds. So family offices, if any funds are looking to raise funds, family offices do help with that as well. And I have closed 4 deals through VCs in 2020 um, during lockdown. I'm about to close 2 more this year. I mean, in this month, sorry. So I think one is through a family office and one is through a VC. So I think both operate in a different manner, but one is a bit discreet and one is more aggressive that way. So I think we should have relationships with all of them. Yeah.
Okay. Somebody's asking you about some crypto ban right now. But anyways, that's off topic.
Yeah, that's off topic. Yeah.
Thank you so much. Thank you so much, all of you. Thank you, Vandana. So the takeaway is they are discreet in disclosing, but once you get in, you will get in for good.
Yeah.
I think personally, what I feel that I'll be more comfortable as a person. I am comfortable working with family offices, be it a single family or multi, but more like a single family. But that doesn't mean that I cannot work with VCs like Vandana, Gary, Harsha, John Paulo. So, but the reason I asked the question because everybody has a little bit of comfort zone, but Harsh, you are politically correct as well there. But Gary, obviously, just like you, I'm comfortable with family offices and families. Perfect. Let's take some closing remarks before we wrap up the show. If we have this topic again with you all, probably we would like to discuss something else, and I would like to know what. John Paulo, what's the closing remarks for this episode, and what would you like to hear more or share more in the forthcoming sessions on this topic?
Well, I think that it would be probably important to educate the audience about the different entities that they can interface with, because there's still a lot of ignorance in the market, and you could see it in the pitches that we receive on a daily basis across the spectrum. So I think if we could devote time to also the differences between single family offices and multifamily offices, or between single family offices and the investment funds out there, I think it would be helpful to go a little bit more granular. Because while I'm here now, I was just reading on my LinkedIn, and somebody just pitched me, not having read anything about what I do, and they just got the names and boom, and they shot. But it doesn't really make an impression, so to speak. So I think that this is important in educational, as DCTV does at LATOKEN, something that we want to work on more and more to fine-tune the mechanism for startup to reach capital. Thank you. You can reach me on LinkedIn anyway, and on Instagram, on Twitter, and gianpaoloparigi1@gmail.com. Thank you all for having me here.
Thank you, John Paulo. That was John Paulo, and you rightly get the details. But don't just reach out on LinkedIn like that. Gary, over to you. Closing remarks, and what are you going to expect from the next session of this on this topic? Thank you.
Yeah, sure. So, closing remarks, AI is a new electricity, and it doesn't matter what vertical market, AI is going to be able to touch us everywhere. And the companies that invest in different types of solutions that are going to optimize and make our lives more efficient and help guide us are really important. You can reach me, Gary Fowler, on LinkedIn. You can reach me, Twitter. I've got shows. Love to hear from you. Stay happy, stay healthy, and go get them.
Yes, that's very important. Happy, healthy, very important. Thank you, Gary. Harsh?
Yeah, so definitely family offices are extremely important. And if you look at very long-term investments which are happening these days, family offices are the ones leading the charge, right? Especially in sectors which require a lot of upfront investment, a lot of R&D, a lot of technology development, etc. Family offices are leading the charge. So that's where it becomes extremely important to kind of balance it out. You have VCs funding these high growth, high tech startups, and family offices working on these long-term infrastructure-based, development-based projects which have very long-term business horizon. So that is why I see family offices being extremely valuable. So these were the closing remarks for this session. If anyone needs any help, feel free to reach out to me. I'm available at Harshetia on Facebook and LinkedIn, and I'm active in both the social networks. Looking forward to reach out to more people. Thank you.
Thank you. Harsh is open. Vandana, last but not least.
Okay, thank you, Sunny, once again for having me here. Thank you, LATOKEN TV, for arranging this platform over and over again and coordinating it so well, with all the speakers, connecting them globally. For me, it's all about relationships. So if you have a good relationships with VCs, you can close things fast. If you have a good relationship with family offices, you can close things fast. So I think both are really, really important. And I am very happy to be here as a happy family. Like Gary said, we have like-minded people. We share a lot of business ideas here. So feel free to reach out to us. These are therapy sessions for everybody. And be positive, be happy, read the book, Power of the Subconscious Mind, and connect with me on LinkedIn or my website if you need investments.
Yes, see? So it's all about relationship, be it a VC or a family office. I truly agree to that as well.
Yeah.
Thank you so much, Vandana, John Paulo again, Harsh, Gary, every day, for being a part of the VCTV family. That makes this sessions and other sessions more special when people like yourself really support this sort of initiative that started last year. So thank you so much again, viewers, startups, entrepreneurs. You can always reach out to Harsh, Gary. They're open. They've already shared their contact details. You can reach out to me, and I'm happy to connect them with you on VCTV as well. So yeah, that brings us to the end of the session. I'll be back tomorrow on another episode of VCTV. Till then, as Gary said, stay happy, stay healthy, and stay connected, and take care of yourself. Bye-bye.